5 positive indicators of BTC price recovery. Indicator 1: Omicron's fear is decreasing. When the Omicron variant first appeared, the stock market, Nasdaq, and currency markets all fell, with most cryptocurrencies falling by more than 20%. The reasons for this are that investors believe that inflationary prospects are concerning, that the new COVID variant could be powerful, that the economy is about to enter a recession, leading to a withdrawal of investor funds. The good news is that the first research report containing evidence on Omicron has now been made public. According to the report, even though the Omicron variant is spreading rapidly, it has not yet resulted in an increase in hospitalizations. Confirmed patients require less medical intervention. Most cases are mild and do not require oxygen, and the length of hospital stay is roughly 1/3 that of the Delta variant. Simultaneously, the European Centre for Disease Control and Prevention recently stated that most people infected with the Omicron strain had mild symptoms or were asymptomatic, with no severe cases or deaths to date. According to American infectious disease expert Dr. Anthony Fauci, it is almost certainly less dangerous than the Delta variant. As a result of this news, European and American stocks surged across the board on Tuesday night, with the largest increase in 3 months. The 3 major U.S. stock indexes all started the day higher. The Nasdaq rose more than 3%, the most in a single day since March. The S&P 500 index rose more than 2%, returning to above 4,600 points, and the Dow rose 1.7%. As a result, the positive link between the surge in stock markets and the rise of the cryptocurrency market will not be delayed for long. Indicator 2: Market sentiment is still rising. From the big crash last Saturday to the present, the lowest point only appeared at $39,999 for a moment, and then firmly stood firm in the $46,000 – $48,000 range, indicating that this area has a solid support position. Only from December 5th to 6th did the market enter a period of fear. Following that, the market sentiment moved in a positive upward trend. As these Google Trends charts demonstrate, the search volume for Bitcoin is continuing to increase, as is the level of BTC by interest. Indicator 3: Billions in USDT minted. Every additional USDT issuance will spark a heated debate. According to data from Whale Alert, Tether issued an additional 1 billion USDT in Tron on December 7th. Tether has created nearly 3 billion USDT in the last 2 weeks. The current supply of USDT exceeds 76 billion, which is roughly twice the supply of another US dollar stable coin, USD coin, which has slightly more than 40 billion. From another angle, this means that more money is pouring into the cryptocurrency market, which bodes well for the market to turn bullish. Indicator 4: Normalization of futures market data. The Bitcoin futures market experienced a significant deleveraging event on December 4th, with more than $5.4 billion in open positions being closed. Total futures holdings fell by 24.5% in one day, from $22 billion to $16.6 billion. In addition, futures holdings were nearly halved, reverting to a safer position. Indicator 5: Continued whale buying. The Bitcoin whales have only slightly reduced their holdings since the peak of the panic, and even then the reduction is not significant. When we look at the supply held by long-term holders, we can see that their total holdings have remained unchanged over the last week. This suggests that the market sell-off could be the result of short-term investors. Following the recent shock, the major players began the process of buying and buying again. According to CryptoQuant analyst venture founder, the third largest Bitcoin whale, who bought 2,702 BTC, bought 388 BTC again yesterday for a total investment of approximately $50,600. Over 10,000 BTC have been purchased since November, with over 5,600 BTC purchased in the last 2 weeks. Also, as the chart from Glassnode shows below, Ethereum whales are still buying. As a result, in the eyes of big investors, the market is still in a bull market, which also gives hope to investors looking to the longer term. Overall, the market could be said to be in a low-level shock period. and it has temporarily left the $46,000, $47,000 range. But how it will develop in the future is unknown. However, as top crypto influencer Plan has suggested for his prediction model, we should give the market 1 month to recover.